Well, market selling off after Fed Chair Powell mentioned accelerating the taper in his testimony today. Our next guest says to expect the volatility to continue as investors adjust to a post-QE world and earnings growth once again becomes a driving force behind the markets. Joining us now is Chris Grisanti, MAI Capital Chief Equity Strategist. Chris, great to have you with us.
Nice to be with you again, Melissa.
I'll ask you the same question that I asked for David, and that is, what should a market be valued at without free money, basically, without the Fed there? In support through taper and lower interest
that's
rates?
A great question, and the real answer is that we're going to find out, and I think pretty soon. It was unfortunate today, Melissa, I think, that he chose the Omicron background to deliver a needed message, which is, hey, inflation is chugging along, as is the economy. So that's not necessarily a terrible thing. It means the economy is racing. It means good things. It's just that plus Omicron at the wrong moment, I think is really giving the market a little concern. However, having said that, I think higher rates will mean that PEs come down. The question, though, for the market is, can earnings increase fast enough that that's okay? And boy, they're increasing fast. And don't forget, earnings are nominal. So higher inflation, all things being equal, will mean higher earnings next year. So it's far from a far gone conclusion that that the market has to, slump if inflation goes up some.
Do you think this market reaction today is an overreaction? I mean, basically, it was a give back from yesterday. So is this? How do you interpret it?
Overreaction. I do, and the reason is, look, Omicron could be as bad as Delta, but remember, because of Delta, I think the Fed kept rates lower longer, held off on the taper. And if Omicron really comes out to be something, as bad as Delta, the Fed is not going to start raising rates. They're not going to keep talking about how quickly they're going to do the taper. Their first enemy is defeating a now mutating pandemic. Inflation is a regrettable side effect of doing that, but it's one have been willing for the last 20 months to take. And if Omicron continues to raise its ugly head, I think they'll continue to go that path.
So inflation will trump, basically, the concerns about a variant, because inflation is such a big problem that they're going to have to go forward. That message to the markets, though, is a hard one to swallow, Chris, obviously. I mean, if you're thinking that
Melissa,
wage pressures, cost pressures are going to continue to go higher and maybe even be exacerbated by Omicron, that's not a pretty picture when it comes to earnings. We've already seen a glimpse of that in the last quarter.
Sure, when you paint it that way, it's not. But I don't see it developing. I think this is a more dynamic situation. I think you have Powell on day 3 of Omicron. If Omicron really spins into something bad in day 14 or day 21, and when he's back in front of Congress, he's not going to be saying, we're going to defeat inflation at all costs. He's going to say, we're worried about a continuation of the pandemic. The language will change if Omicron really becomes a problem. I feel very confident that Jerome Powell's first target is defeating the pandemic. And secondly, only secondly, is it inflation.
Do you rethink parts of your portfolio, Chris, in light of what the Fed chair said today, or at least on the expectation that rates will move higher maybe sooner than we thought? We originally had you on to talk specifically about the payment stocks, and a lot of them are high multiple names. And so I'm wondering if those names do okay in this rising rate environment.
No. Our default has been that rates will be higher next year, and so will inflation. And as David put it, we've been putting money in the jar every time somebody says transitory, because we don't think it's transitory. But I would reiterate, this is not a disaster. Inflation is not a bug, but a feature of a strongly growing economy, as long as it doesn't get out of control. So we think corporate earnings will be strong next year. So therefore, our portfolio is set for what Jerome Powell is thinking about. What it's not set for is another kind of shutdown if Omicron really gets bad. I think that would be much worse than the relatively powerful inflation that I think can be controlled.